Greetings to all the savvy investors out there. Today, we are going to delve into the world of stocks with a focus on the best stocks to buy now. In the vast universe of investment, choosing the right stocks can be the difference between a golden portfolio and a lackluster one. We'll be shining a spotlight on 5 companies: RenaissanceRe Holdings, Eli Lilly and Company, Welltower Inc, Nvidia Corp, and Progressive Corp. So, tighten your seatbelts as we get ready to explore some promising investment opportunities. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First off, we have RenaissanceRe Holdings Ltd, a global provider of reinsurance and insurance. Known for its savvy risk management strategies, RenaissanceRe, often abbreviated as RNR, has been navigating the often tumultuous waters of the insurance and reinsurance industry for over 25 years. In the past, RNR has shown a strong track record of performance. The company has consistently demonstrated resilience, even in the face of challenging market conditions. It has a history of delivering solid returns to its shareholders, and it has long been recognized for its financial strength and stability. The company's prudent risk management, combined with its innovative approach to underwriting and investing, has served it well. But what about RNR's business model? Well, it's all about managing risk and providing coverage for the unexpected. The company offers a range of reinsurance and insurance products, covering everything from natural disasters to cyber threats. RNR operates through 3 segments: property, casualty, and specialty, and other. The property segment provides catastrophe and other property reinsurance and insurance coverages. The casualty and specialty segment offers coverages in the areas of casualty, professional, specialty, and other lines. This diverse portfolio allows RNR to spread its risk and increase its potential for returns. Looking ahead, the future seems promising for RNR. The global reinsurance market is expected to grow in the coming years, driven by factors such as increasing natural disasters, the rising cost of insurance, and growing demand from emerging markets. As a leading player in the industry, RNR is well positioned to benefit from these trends. The company is also actively exploring new opportunities in areas like cyber insurance, which could provide additional avenues for growth. So why could RNR be a good investment? There are several reasons. Firstly, the company's strong financial position gives it the capacity to weather market downturns and take advantage of growth opportunities. Secondly, its diversified business model helps to mitigate risk and generate consistent returns. Thirdly, the company's forward-thinking approach means it is always looking for ways to adapt and innovate in response to changing market conditions. Of course, like any investment, RNR comes with its own set of risks. These include potential losses from large-scale events like natural disasters, fluctuations in the insurance and reinsurance markets, and regulatory changes. However, the company's strong track record and prudent risk management strategies provide some reassurance. In conclusion, RenaissanceRe Holdings, with its robust financial health and promising prospects, is definitely one to watch. Its diversified business model, strong track record, and potential for growth make it a compelling consideration for any investor looking for a solid addition to their portfolio. Next on our list is Eli Lilly and Company, a global pharmaceutical giant. This Indianapolis-based behemoth has been around for more than a century, since 1876 to be precise, and has consistently been a top performer in the healthcare sector. Let's take a step back and look at Eli Lilly's performance over the years. Historically, Eli Lilly has demonstrated a solid track record of financial performance with steady growth in revenue and earnings. The company's diverse portfolio, including blockbuster drugs like Cialis and Humalog, has been a significant driver of this growth. But what truly sets Eli Lilly apart is its commitment to innovation. The company consistently invests heavily in research and development, aiming to stay at the forefront of medical advancements. In recent years, Eli Lilly has brought several new, innovative products to market, including drugs for diabetes, cancer, and autoimmune diseases. These innovative therapies have not only improved patient outcomes but have also significantly contributed to the company's bottom line. Looking ahead, the future seems bright for Eli Lilly. The company's robust pipeline of potential new drugs, coupled with a strategic focus on areas like oncology, diabetes, and neurodegeneration, positions it well for future growth. Furthermore, Eli Lilly's recent foray into the exciting field of precision medicine, which aims to tailor treatments to individual patients, could open up new avenues for expansion. In terms of investment potential, several factors make Eli Lilly an attractive proposition. First and foremost is the company's strong financial health, backed by consistent earnings growth and a solid balance sheet. Secondly, the company's impressive pipeline of innovative drugs presents significant growth opportunities. Lastly, the company's commitment to returning capital to shareholders, evidenced by its regular dividend payments and share buybacks, makes it a compelling choice for income-focused investors. However, like with any investment, there are risks associated with Eli Lilly. The pharmaceutical industry is highly regulated and subject to significant litigation risks. Furthermore, the company's dependence on a handful of blockbuster drugs exposes it to the risk of revenue decline due to patent expirations. Despite these risks, Eli Lilly's strengths and growth prospects make it a company worth considering for your investment portfolio. In conclusion, Eli Lilly and Company has demonstrated a long history of strong performance driven by a diverse product portfolio and a commitment to innovation. The company's robust pipeline and strategic focus on high-growth areas position it well for the future. While there are risks involved, the potential for significant returns makes Eli Lilly an intriguing investment proposition. So, is Eli Lilly and Company the right fit for your investment portfolio? That's a question only you can answer. But one thing is for sure, Eli Lilly and Company, with its consistent performance and innovative pipeline, certainly makes for an intriguing investment proposition. Moving on, we have Welltower Inc., a real estate investment trust that invests in healthcare infrastructure. Welltower Inc., a stalwart in the healthcare real estate sector, has been a consistent performer over the years. This company, with over 40 years of experience under its belt, has a portfolio that spans across North America and the United Kingdom. Their investments primarily focus on senior housing, long-term/post-acute care, and outpatient medical properties, a unique niche that sets them apart in the market. Looking back at Welltower's past performance, they've shown a remarkable ability to weather economic storms. During the financial crisis of 2008, for instance, while many businesses were floundering, Welltower managed to keep its head above water thanks to its resilient business model. But what makes Welltower a potential stock to buy now? Well, it's all about their unique position in the healthcare sector. As a real estate investment trust, Welltower has a dual role. On one hand, it provides critical infrastructure for healthcare services. On the other, it offers a way for investors to gain exposure to the growing healthcare market without the risks associated with direct investment in healthcare companies. Given the aging population in developed countries, the demand for senior housing and long-term care facilities is expected to grow. This demographic trend provides a steady stream of tenants for Welltower's properties, ensuring a consistent revenue flow. Additionally, healthcare, being an essential service, is less susceptible to economic downturns, providing a level of stability for investors. Looking towards the future, Welltower's prospects are promising. The company has been actively investing in new properties and expanding its footprint. For instance, in 2024, Welltower announced plans to acquire a portfolio of senior housing properties valued at over $2 billion. This growth strategy, coupled with the favorable demographic trends, positions Welltower well for the future. But it's not just about growth. Welltower has a strong track record of returning capital to shareholders. The company has consistently paid out dividends to its shareholders, making it an attractive option for income-focused investors. In terms of risks, like any investment, Welltower is not immune. A significant downturn in the healthcare sector or changes in government healthcare policies could impact Welltower's performance. However, the company's diversified portfolio and prudent financial management help mitigate these risks. So, why consider Welltower as a potential stock to buy now? It's a combination of their unique position in the healthcare real estate sector, their consistent performance, their growth prospects, and their commitment to returning capital to shareholders. These factors make Welltower a compelling consideration for any investor looking for a resilient and growing business to add to their portfolio. Welltower Inc., with its resilient business model and growth prospects, is a stock worth considering. Next up is Nvidia Corp., a key player in the technology sector. Diving into the world of technology, we find ourselves looking at Nvidia Corp., an industry giant that has been shaping the tech landscape for over 2 decades. Known for its graphics processing units, or GPUs, Nvidia has been a pioneer in the field, driving innovation and pushing the boundaries of what's possible in digital graphics and computational power. Rewinding a bit, Nvidia's journey has been anything but ordinary. Founded in 1993, the company started as a venture into the world of 3D graphics, a niche market at the time. Fast forward to today, and Nvidia has transformed into a tech titan, with its GPUs powering everything from gaming consoles and personal computers to data centers and autonomous vehicles. Nvidia's past performance has been nothing short of remarkable. Over the past 5 years, the company's stock has seen a meteoric rise, outperforming many of its peers in the tech sector. This growth is a testament to Nvidia's innovative spirit and its ability to stay ahead of the curve in a rapidly evolving industry. But the past is just that, the past. What makes Nvidia a compelling investment prospect is its future. The company is well positioned to capitalize on several emerging trends in the tech industry. From artificial intelligence and machine learning to virtual and augmented reality, Nvidia's technologies are at the heart of these revolutionary fields. Additionally, Nvidia's recent venture into the world of data centers and cloud computing has opened up new avenues of growth. With the proliferation of big data and the increasing need for high-performance computing, Nvidia's data center business could be a significant growth driver in the coming years. Moreover, Nvidia's strong market position cannot be overlooked. The company holds a dominant share in the GPU market, allowing it to leverage its scale and technological prowess to stay ahead of its competitors. This market leadership, coupled with its robust financials and strong growth prospects, makes Nvidia a potentially lucrative investment. However, like any investment, Nvidia comes with its share of risks. The tech industry is highly competitive and rapidly changing, and any misstep could hurt Nvidia's prospects. Additionally, the company's high valuation might be a concern for some investors. Therefore, a thorough analysis and understanding of these risks are essential before making an investment decision. In conclusion, Nvidia Corp, with its cutting-edge technology, innovative spirit, and strong market position, offers an intriguing investment opportunity. While the company's high valuation and the competitive nature of the tech industry do pose risks, Nvidia's growth prospects and its role in driving technological innovation make it a stock worth considering. Nvidia Corp, with its cutting-edge technology and strong market position, is a stock that could add value to your portfolio. Last but not least, we have Progressive Corp, a leading insurance company. This powerhouse of the insurance industry has been in the game for more than 8 decades, and it's still going strong. In the rearview mirror, Progressive Corp's performance has been nothing short of impressive. In the last 5 years alone, the company has consistently reported robust growth in its earnings per share. This upward trajectory is a testament to the company's successful business model and its ability to adapt and thrive in a competitive market. But what sets Progressive Corp apart from the rest? Well, it's their competitive advantage, which lies in their innovative approach to insurance. Progressive Corp was a pioneer in introducing immediate response vehicles for claims adjustment, an idea that revolutionized the industry. They were also the first to offer a drive-in claim service and to allow customers to purchase auto insurance online. This forward-thinking approach has kept them ahead of the pack, and they continue to innovate, keeping their offerings fresh and relevant in a rapidly evolving market. Looking ahead, the future prospects for Progressive Corp are bright. The company's strategy to focus on technology and customer-centric services positions it well for the future. With the rise of digital insurance platforms and the increasing demand for personalized insurance products, Progressive Corp is well equipped to meet these market trends head-on. The company's strong financials further bolster its future prospects. Progressive Corp's revenue has been on an upward trend, and it boasts a healthy balance sheet with a low debt-to-equity ratio, which provides it with financial stability and the ability to invest in future growth opportunities. The company's strong cash flows also allow it to pay regular dividends to its shareholders, making it an attractive option for income-seeking investors. Moreover, Progressive Corp's diversified portfolio of insurance products, ranging from auto and property insurance to commercial and specialty insurance, provides it with multiple revenue streams and reduces its dependence on any single market segment. This diversification strategy not only mitigates risks, but also presents opportunities for cross-selling and upselling, thereby enhancing customer value and boosting revenue growth. But, as with any investment, it's important to consider the risks as well. The insurance industry is highly regulated, and any changes in regulations could impact Progressive Corp's operations. Additionally, the company faces intense competition from other insurance companies. However, its strong brand, innovative products, and customer-centric approach provide it with a competitive edge in the market. In conclusion, Progressive Corp, with its strong financials, robust growth strategy, and innovative approach to insurance, presents an attractive investment opportunity. The company's ability to adapt and thrive in a challenging market environment, coupled with its future growth prospects, makes it a compelling choice for investors looking for a solid and reliable stock to add to their portfolio. Progressive Corp, with its strong financials and growth strategy, is a stock that deserves your attention. There you have it, folks. 5 stocks with promising prospects that you might want to consider for your portfolio. We've journeyed through the fascinating world of RenaissanceRe Holdings, a company that's solidly grounded in the insurance and reinsurance sector. We've delved into the pharmaceutical giant Eli Lilly with its strong pipeline of innovative drugs. We've explored Welltower Inc, a real estate investment trust that's carving out a niche in the healthcare sector. We've looked at Nvidia Corp, a leading player in the exciting world of artificial intelligence and gaming. And finally, we've examined Progressive Corp, a company that's making waves in the insurance industry. Each of these companies present unique opportunities and challenges. They are all different, yet they share a common trait: the potential for future growth. But remember, investment is not a one-size-fits-all affair. It's a journey that requires diligent research, careful planning, and informed decision-making. So, while these stocks are certainly worth considering, they should be a starting point for your own research. Investing wisely is about understanding the fundamentals of a company, its industry, and the broader economic landscape. It's about making decisions based on facts, figures, and thoughtful analysis. And, above all, it's about staying informed. Don't forget to give this video a thumbs up, share it with your fellow investors, and hit that subscribe button for more content like this. Remember, the key to successful investing is staying informed. Until next time, happy investing.